Today is Wednesday, March 23rd. Today I'm going to take a look at a single stock using Technician just to analyze it and form an opinion which I think is kind of bullish, although it's really high risk if you look at the fundamentals. Fortunately, I don't really dabble too much in the fundamentals, but when I see things on, say, the Zacks website that says Bear of the Day, Avon Products, and it's citing a 9% drop, and you can see the arrow right here, a 9% drop that day, and which was immediately reversed and moved on to new highs for the year. I get the feeling that everyone hates this stock, and there's probably good reason. It's been a dog for years, but look at this. This is a nice base that's forming. So we get rid of these things. It's a nice base that's forming, and for the first time in quite a while, it is trading above its 200-day moving average. And look at this, on balance volume, actually a rising trend. We'll see a little bit more about that in a minute. RSI, it's on the good side rather than the bad side. I know it's happened before, but you add it all together, and more is better than less, and up is better than down if you're looking to buy a stock. What I'm going to do is zoom out a little bit, zoom way out, and you can see how things have been. This is just in the last 3 years since this 2013 peak. I'm going to draw a trend line right from here before this thing collapsed, one of its many collapses. And you could draw it in many places. Here's one possibility, and if you do that, you see it broke out, came back and tested it, and kept going to the upside. I don't like this line. It's not great. I'm going to actually pick it up and move it just to capture all this data. So now we have a better breakout that happened earlier this year. You can see that move above the 50-day average in red, and move above the 200-day in green, and now this breakout. Now, is this a double bottom pattern? It could be. Is it commensurate, or is it big enough to reverse this 3-year trend? I think it could be. I don't know if it's gung-ho buy, but it could be. And you can see that for the first time in quite a while, on balance volume trending higher. All right, just for kicks, little perspective, let's look at the weekly view here. All right, you can see it's been a dog for quite a while. And if you want to start the bear market from up here in 2008, no, this is not a big enough base to reverse that. But we don't have to get the whole thing here. We're just trying to make some money, find a stock that's going to give us a little pop. All right, you can see also in the RSI, for the first time in quite a while, a bullish divergence in weekly RSI. So a lot of good things happening for Avon. Again, the fundamentals still look bad, still reeling from a dividend cut a few years ago, still missing earnings estimates. But the thing about technicals is they kind of sniff out changes before it happens in the price. So let's put this back into the daily format. And now I'm going to just get rid of a few things just because they're in our way. We already made the point here. So where's a possible upside for this? Well, let's draw some support and resistance lines, or basically just resistance levels. Where could this thing run into trouble? Well, that's a logical place, and there's a logical place. I don't want to even think about going higher than that because that percentage is just nuts. Okay, let's just put some other levels on here, things that possibly could make sense. Now I'm going to draw some Fibonacci retracement levels. Let's just see what happens. There's the top, coming on down here to the bottom. Let's see if there's anything that makes any sense here. And we have a level right in here, the 38.2. It's around 1075-ish. Here we're under 10 on this resistance level. And there's one more thing I want to do, and that's measure this double bottom pattern. So I'm going to grab a segment here. Just going to, this is approximate. I'm not saying that this is an exact scientific measurement. Whoops, grabbed the wrong guy. Get rid of that. All right, there's one times the move. I'm eyeballing it. There's 2 times the move. Okay, so I think we have an area in here just below 10, which is a pretty good target for a breakout, assuming that it doesn't fail right here. I think that 1075 might be even better. That's the actual Fibonacci level. But somewhere in the 10 zone would be a pretty aggressive upside target. And look what happens if it gets there. That's more than a double. It's about 130% gain, 120% gain. So it's definitely speculative, definitely going against the crowd here, definitely going against even the trend, even though it's broken through the trend line in the 200-day average. So it's a speculative trade. If it works, it's a home run. If it doesn't work, well, we'll know pretty soon because it'll be back within this range. And I like that. It's a low risk thing, high return, low risk, not low risk of being wrong, but low risk if wrong. We'll lose, say, 6-7%. Not terrible going after more than a double in a stock. So there you have it, diamond in the rough, or maybe just a bluff. But just looking at a full analysis on a stock that seems that everyone hates might be something good.